A wave of disappointing IPOs and turmoil in the repo market, putting pressure on the banks as we enter the final quarter of the year. The sector has already been under pressure from the move into passive investing, and the recent attempts by the likes of Goldman Sachs to move into consumer banking don't appear to be paying off. Can the financials, which are the best sector for the month of September, keep rallying? Let's bring in Jeff Harte. He's principal at Sandler O'Neill, along with CNBC's senior markets commentator, Mike Santoli. Michael, just start with you. And, I don't know if Goldman's emblematic of the pack, but the journal piece over the weekend about its efforts to kind of reinvent itself with consumer banking show that they've actually lost quite a lot of money on the effort, and it's not clear it's bearing out just yet.
It's not, Kelly, and it's sort of interesting if you think of the backstory for why Goldman is heading in this direction, right? I mean, clearly a lot of the edge that it has had in the past, its franchises and institutional trading in investment banking have been dulled by regulation, by technology, by all these things we know have been going on for a very long time. And I do think that, Goldman and many other firms would say, well, we were forced to become a bank holding company. We have the technological infrastructure to create a lending engine for the consumer and emphasize other high margin businesses. But that doesn't necessarily mean it's going to be nearly as profitable in terms of returns as our old businesses were. So this is the fix I think some of these firms are in.
Right. And Jeff, what's your rating on Goldman? How do you view their prospects?
I mean, we've got to buy on it. I actually like Goldman a lot here still. The article today was pretty negative, and it did point out that, profitability hasn't been great in the consumer business, certainly, or the losses have been building up. But I think you got to take a step back and understand Goldman is investing in the long term here. They're building businesses, and that's the way it goes when you're starting a new business. You're going to have losses for a while. We're looking at kind of the consumer business having about a 60 basis point drag on their ROE this year. They're potentially going to push a 13% ROE this year. So I think it's pretty manageable in the greater scheme of things. And excuse me, but as mentioned earlier.
I wonder, Jeff, actually, to that point, because it raised for me a lot of questions about whether the Wall Street business model is fundamentally broken or not. Or is it just going to be that Wall Street's smaller but still is profitable in the future? So, for example, Morgan Stanley, some of the others who are more pure play out there, how would you rank them? Would you say that, hey, there's still a place for them, you can still do quite well, their returns on equity still look pretty good, or no?
Yeah, I think there definitely still is a place for them. It's not going to necessarily be like it was, but remember, if you look back pre-crisis, you probably had a 13, 14% average ROE out of these companies. But in good times, it'd be 30, and in bad times, they'd break even. Well, now we're seeing a much more stable 13, 14% ROTCE out of these guys. So, I mean, the volatility has declined some, but I think there's definitely still room. And the big key here is they're focused on the capital markets. And if you look back over, as far back as we have data, capital markets globally grow at a multiple of GDP. So, I mean, these businesses should still have some legs to grow, though it's not going to be part of the go-go days maybe we saw, 15 years ago.
Mike, what would you add to that, especially as we get kind of late cycle?
Yeah, so, I do agree that, look, if you look at the way these companies are now valued, they have very modest valuations which don't imply they're going to get back to prior levels of profitability. So from an investor perspective, maybe the market has figured this out. But I do think that you could look at things, and I don't want to generalize too much from one market phase, but the way that the IPO market has really taken this slide, and not just because public investors say we don't want to pay up for these unicorn business models, also just look at how they've traded on day one, right? I mean, clearly, the underwriters thought they had demand behind them on Peloton, on Uber, on Lyft, and they broke price immediately. What does it say about their role as mediators of between providers of capital and consumers of capital that you can kind of misfire serially on that exact transaction? So I wonder if the market's just too quantitative, too systematic, and what they used to do, which was read the market, is just not as easy anymore for them.
Jeff, it's an excellent point. I'll give you the last kind of rebuttal on that.
Yeah, I think it's important, not to turn kind of intracycle volatility into the next big downturn. I mean, the IPO market's had some headwinds recently, certainly. But, I think still things look pretty healthy. And as far as they look healthy going forward, I think there's still a lot of good things going on there. So I'm cautious to say that the kind of headwinds we've seen recently, which have some environmental kind of macro concerns to them. Investors are becoming more discerning, but also some very company-specific issues. I don't know that I'd go so far as to say, the IPO market's turning the wrong way. I think we're kind of hitting a pause here, and as we always do in cycles, it kind of ebbs and flows.
We got to go. Do you also have a buy on Morgan, Jeff?
I do not. We have a hold on Morgan Stanley.
Why is that, real quick?
I think it's, it's become more challenging here, but I think the valuation's a little more reflective of kind of what's in their business model.
Got it.
And I see less upside to EPS versus consensus. I just think the Street's a lot closer to what they can earn than they are with Goldman.
All right, good stuff. Guys, thank you both. Appreciate it. Jeff Harte and Mike Santoli joining me on the banks today.